And we are live as your favorite insurance agent, Starnold Jr. And
Michelle, the wealth that'll tell.
cool. And we have another exciting show for you. So if you're in the process of looking to buy a new home, looking to sell your house and buy a new home, looking to refi your mortgage, which things might be a little crazy with refi because mortgage rates are up, but they're trending down a little bit. This is the show for you. So for those that never jumped on the show before, this is FinLit Live. FinLit stands for financial literacy. And this is where we bring on the experts and ask all our questions because honestly, I have more questions than answers. And so this is where we get our questions answered. But we open up to you, the audience. So if you have questions, you can get your questions answered too. So if you have any questions, definitely put them in the chat. And we are excited about today's show because it's all about mortgages. So let's go ahead and get lit. All right. So without any further ado, let's go ahead and bring on our special guest, John Gutierrez. Hey, John, how's it going?
I'm good. How are you?
Good. Thank you for taking time out of your busy
He's still
schedule
thinking
to
about
be with
it.
us.
Yeah, thanks for having me on. I really appreciate it.
Absolutely. So go ahead and
Well,
introduce yourself.
this is a big burning.
Cool.
Yep,
So
go
yeah,
ahead and
I'm
introduce
John
yourself.
Gutierrez. I'm the president of and broker owner of Lone Star Premier Mortgage. I've been in the industry for about 10 years now, or coming up on 10 years, but a student of real estate and mortgages and finance for much longer.
Excellent.
Well, fantastic. Well, you have answers that everybody want to hear about. Interest rates, what the state of the mortgage industry. And we just want to pick your brain. You can give some insight and answer those hard questions, okay?
Yeah, absolutely. I love answering hard questions and giving people the real truth of what's going on there rather than a sales pitch.
Okay, so we advertise things that lenders may not tell you. Why don't you explain to us if it's not what they should tell us or if it should be better explained? What are some of those things, John?
Yeah, so we operate in a very unique standard in that we explain everything from start to finish. And I can't tell you how many people I come across every single day that said, I've talked to 3 other lenders, or I've talked to so and so, or I've read online different things, and nobody's explained it the way you did. Thank you so much. And it just leaves me perplexed. I've
Mhm.
even hired new loan officers from other companies, and they were like, nobody taught me to explain any of this to anybody like that. So, your lender shouldn't be holding anything back. But I think, and I don't think they truly do. What I think is that people just don't explain as well as they should. So there's a lot of things that just don't get explained, and when you explain it in common sense terms, it makes sense. But there's also a lot that maybe there are less than scrupulous people in our industry that may not tell you because they would much rather just you sign on the dotted line and not fully understand all of your options. So that, in a sense, can come down to they just didn't explain it well enough. But that does happen.
Well, yes, it happens, but at the biggest moment, one of the biggest purchases of your life, you want someone to this is the time that I want you to hold my hand. And,
Correct.
and that's necessary. You agree?
I absolutely agree. So that's why I explained to everybody, if you let me, I will talk your ear off about every little bit of this, and I want you to ask me a million questions. By the end of it, they'll understand that I like talking about these things, and it's one of those processes that once you get into it, all of a sudden everybody around you becomes the expert. Everybody's got the brothers, sisters, cousins, uncles, friend who did this, that, or the other. And I tell them, call me because everybody's financial situations are different. What was right for them may not be right for you.
So this it has to be tailor made for each individual client, correct?
Absolutely. I mean, even though our industry is very well regulated and every bank has to follow the same rules, certain programs or products, might not benefit you in a better way that another one may. And sometimes you just run into situations in our industry. Here's number one, right? That your loan officer may not tell you. I don't know enough about that product to properly advise you, right? The four main products that every
Mhm.
single bank will offer is a conventional loan, FHA, VA, and USDA. But there's all sorts of iterations and products and programs within those, like a 203K, down payment assistance, home style renovation loans, one-time close loans, which are a form of construction loans. And your loan officer may not tell you, hey, I just don't know about that program. Because when you start getting into these very, niche specialty products, there's a lot of ins and outs that you might need to know. And so sometimes a loan officer may try to dissuade you from using those programs because either their company doesn't offer it or they just don't know enough about it to be competent in it. So they want to go with what they know and what's easy for them rather than what may be in your best interest.
So break
Mhm.
that down for us. Like you just mentioned
Wow.
four loan products. Like what is the difference between those four?
So in the most rudimentary of terms, let's go through that, right? There's pretty much only four major programs or main loan programs. You've got a conventional loan. The way I explain it is that that's just a loan between you and the bank. And because the bank's on the hook for everything by themselves, they tend to be a little bit more strict. Usually they require higher credit scores, bigger down payments. They don't let you borrow as much, and they're a little bit more strict on some of their credit requirements and rules. Your second option is an FHA loan. FHA was a government program put back in place in the 30s to make housing more affordable for everyone. I tell most people think of this one like the government's going to be, in a sense, a silent cosigner because they'll be on the hook for a portion of it to the bank if something goes wrong. But because they're covering a portion of it, they tend to be a little bit more lenient. Usually, they'll let you come in with lower credit scores, smaller down payments, they'll let you borrow more, and they're a little less strict with some of their credit requirements. Your third option is a VA loan. That's a loan for veterans. It's guaranteed by the Veterans Administration. If you qualify for a VA loan, that is probably one of the best loans you can get. They require no down payment, and with no down payment, they also require no mortgage insurance on there. So veterans can actually borrow or qualify for more, borrow more, and their monthly payment will be a lot less as well without having to put 20% down. And then that fourth option is a USDA loan. That's United States Department of Rural Development and Agriculture. This one's meant for your rural country farmland type areas. Think places that have well and septic rather than city water and city sewer. So the property, this one's probably one of the most restrictive, requires the highest credit score. They let you borrow the least. And it's a little bit more difficult to qualify for because the property itself, as well as the buyer, have to qualify together.
Wow.
Wow. Now,
That was
we've
great.
had several people on here from the mortgage industry, and you have just laid out so great information I've never heard of before. I'm speechless. I never knew any of that.
Mhm.
You're very knowledgeable.
Well, thank you. And what I just broke out to you guys is no different than I've had three conversations today laying out the exact same thing because I want everybody to know all their options when they're getting into it. We typically start off with the monthly payment, right? If you'll allow me before you ask another question, I'll just kind of jump into this, which is
Absolutely.
or the question that I get a lot of, or when people call is, well, I want to qualify for this amount, and I have to ask, well, what brought you to that purchase price? Well, it's just kind of the kinds of homes that I like. And I said, okay, let's take a big step back. Tell me a little bit about where you want to stay comfortable with your monthly payment, because that should be what drives you. That's number two that your loan officer may not tell you, right? They're going to want to
Yeah.
try to qualify you for the most possible. But realistically, I tell everybody that, I'm not going to be the guy pushing you into the most expensive thing. I'm going to be the guy sitting on your shoulder saying, hey, are you sure you want to do that? Just because you can doesn't necessarily mean you should. A home of your own is a wonderful thing to have, but life happens outside the house too, and you want to make sure that you have money to do the things you enjoy doing, and you're not just struggling to make the house payment every single month. And so, if you tell me that to stay comfortable with your monthly payment, you want to be at $1,900 a month and no more, then I would tell you then you want to keep your house price search to a certain number or less, because your
Mm,
monthly payment's made up of four different numbers, none of which the bank actually controls. At the end of the
wow.
day, it all comes down to how expensive a house you're buying. So if you say, hey, I want to stay at 1900 or less, then I'm going to say under this number or less to achieve that. The monthly payment is first and foremost made up of the principal and interest. That's the first number. That's just to pay the loan back. At the end of the day, that number just comes down to how expensive a house you're buying, how much you're putting down, and thus how much you're borrowing, and how long you're stretching the loan out for. The second number that's going to be in there is going to be your homeowner's insurance. Insurance is like your car insurance. As long as you have a loan on the house, you have to have insurance on the house. And this number Also, like your car is going to come down to what company you choose, because you can choose any company you'd like. So this number comes down to what company you choose, how will you negotiate your deductibles and coverages, and what kind of policies you elect. Darnell can tell you all about that.
Yes.
The third number is going to be your property taxes. Taxes are what they are from the county. The county is the one that sets the tax value and the tax rate for every single home in the county. So this is just going to come down to what county you're looking in, and even what different parts of the county you're looking in. You know, newer construction areas tend to have higher tax rates because the developers are trying to recoup a lot of the infrastructure that they put in out there, right? So,
Mm.
you know, that's something to watch out for, because you might be pre-approved up to a certain number, but that number could change depending on how expensive the taxes are in certain areas. And then that fourth number is going to be the private mortgage insurance. The federal government says, look, you don't have to have 20% down to be able to get approved to purchase a home. But if you're not putting 20% down, you have to have insurance on the loan itself. And that's for every single loan type except for one, which is the VA loan, because it's guaranteed by the Veterans Administration. But all four of those numbers together are going to constitute your monthly payment. So here's number three that your loan officer won't tell you. They don't control your monthly payment. See, a lot of them will tell you, oh, well, if you come with us, your payment will be lower. They don't control those numbers. They may be underestimating numbers to try to make their offering look more attractive, but they don't control that. At the end of the day, it
Wow.
just comes to, you know, how expensive house you're buying and where you're buying at.
Mhm.
Wow.
Well, you know, I'm not buying a house at the moment, but I feel really cared for, John.
I'm not telling you guys anything that I don't do in my standard conversation I have with every single person every day. Like I said, I've done this 3 times today. I took 3 applications today, and I walk everybody through
Yeah.
the exact same conversation, because this is what I'm saying. They may not be, you know, not telling you these things, but they're just not explaining it well enough.
Mm. That's huge.
Yeah.
Wow.
I
So,
mean,
what are
that's
some of the
very
hiccups that
fair.
you find that people have when they're going through the mortgage process?
Glad you asked that. That's the very end of the conversation. So I tell most people at the very end of our conversation, you know, first and foremost, consider your credit on lock. Don't open any accounts, close anything, make any late payments, go over the limits. We want to make sure that, you know, nothing changes throughout this process significantly. I'll tell you a funny story. I had a client a long time ago. They called me about 3 weeks into their 4-week contract. We were getting ready to wrap everything up. And he said, hey, I was having a discussion with my significant other, and we want to know if it's okay to go buy groceries because you said not to spend anything. And so these poor people had not bought groceries for 3 entire weeks through this process because they were making sure that
Wow.
they didn't want to mess anything up. And I was like, oh, I'm so sorry. No, please go buy your groceries. We just don't want your credit changing. So that's the big one. Don't go open any new accounts, right? Because how we get you approved, and here's, you know, another myth that, you know, or here's another thing your loan officer may not tell you. They don't control how much you're approved for, right? How
Mm.
we get you approved comes down to the federal government. And in the federal government's infinite wisdom, who knows best for all of us, right, says
Right.
that you can't borrow more money than you can manage to pay back safely. And they're not going to let you decide how much that is. And they're not going to let us decide how much that is. They're going to figure that out for you. And how they, because they don't want you getting in over your own head, and they don't want us helping you get in over your own head. So how they figure out how much is too much is when we review your credit, it pulls in all of your debts. Nothing like utilities, so no cable, electric, cell phone, or anything like that. Just money you've borrowed that you need to pay back, right? Things like car loans, student loans, credit cards, and personal loans. And you might, you know, we don't look at how much the balances are in any of those accounts. On everything but student loans, those get treated a little differently. We're only supposed to look at what's the minimum payment you're supposed to pay. Now, you might make more than your monthly minimum payments, but all we're supposed to look at is what's the minimum you're supposed to pay. We add all of those numbers up together, plus the new debt you're trying to take on. In this case, let's say it was $1,900 for the house. If all of your current monthly minimum payments plus the new debt for the house you're trying to take on together are more than about 43% of what you make in a month on a conventional loan, they'll let you go up to 49% of what you make in a month with some positive factors. You remember before I told you FHA will let you borrow more?
Yes.
FHA will let you go as high as 55 to 56% of what you make in a month. So let's just say
Wow.
between the two programs, roughly half. If all of your current monthly minimum payments plus the new debt for the house of about 1,900 together are more than roughly half of what you make in a month, they're going to look at us like we should know better, that we're giving you too much money for you to be able to manage and pay back safely. So that's how we determine how much you can get approved for. Now, why is that important with regards to not messing up your credit during the process? If you take on new debt and we were already right at the minute or the edge of that 55 to 56%, that could be enough to send you over that edge to where you don't qualify anymore, right?
Mm,
So, that's why we say don't open any new accounts. The other thing I tell everybody is throughout the process that messes up most people is to not move money around. Um, every bank in the country has to follow anti-money laundering laws. And, if you're depositing large amounts of cash that we can't adequately prove to the government standards where it came from, and I'm not talking payroll or tax returns or anything like that, just straight cash deposits at the teller, well, they're going to assume you're either Scarface in Miami moving weight around or Walter White and Jesse making blue meth in the RV in the desert somewhere, right? So we can't
right.
count. So we always tell everybody, before you start depositing large amounts of cash, just give us a call so we can figure out what needs to be documented and how in the correct way. And it's okay to get gifts from family and things like that, but it's got to be documented in a proper way. So those are my two big tips for, how not to make any mistakes. And those are the two big ones that most people do. And we cover that the very last thing before we get off our call.
That's cool.
Wow. Yeah, you really put forth a good effort to prepare your client. And if they adhere to that, I'm certain that it makes your job a lot easier, right, John?
Absolutely, it does. But you'd be surprised at how many people still get it wrong. But
Oh
that's where
no.
we're there to help pick up the pieces and make it right and clean it up. So
Excellent. Well,
Awesome.
sounds like you're very
So
knowledgeable.
tell me,
And go ahead, doctor.
what is your I tell me what your ideal product is and your ideal client, John.
anybody that wants to achieve home ownership. I'm pretty well versed with all the products. We have this conversation on a daily basis, and I'll be completely honest with you. I won't say it's a daily basis, but it does come up. There are some loan officers that like to live in the super clean loan file world. People that have 20% down, who have all their finances in a row, great credit. There's not going to be any issues. We've had a few of those in the past couple of weeks. We got a loan clear to close in 9 days. Right? Actually, it was 8 days.
Wow.
In 8 days, but it was a very clean file. We've got others where it takes a lot of finessing to get it through and make everything work. And those are rewarding. They're both rewarding, right? Home ownership in this country is for a lot of people is that thing that just is so far out of reach, and it can actually set you up with generational wealth because a majority of the net worth of your average family is based in their equity in their home. So, if we don't take care of those people too, who will? Right? I'd love to take care of the easy ones all day, but I also love first time home buyers that need some hand holding and help that help them get their finances set up for their future generation. So, when you ask me what's my ideal product and what's my ideal, product mix and client and product type, all of them. I truly do love just helping people.
That's awesome. So, what have you seen as the major
Fantastic answer.
trends? Obviously, the past 2 years have been a little bit crazy with COVID and everything, but where do you see us heading from this point on?
So, the market for sure is softening. You're not going to see a plummet in pricing or a housing collapse. This is nothing like what 2008 was, right? 2008 was precipitated by the mortgage industry and the real estate industry and hyperinflated prices. This was just, hyperinflation and, hysteria with cheap money for the last 2 years. The rates were so at historic lows that money was, very accessible. It was very cheap. People would qualify for a lot more. So people were selling their homes for a lot more. There were a lot more people entering the home market than ever had been. What you're going to see now is the constricting or tightening of money, right? Rates have already gone up, which means that there's a lot more people that are sitting on the sideline that don't have access to home ownership anymore because it's outside of the affordability for them. But you're going to be hard pressed to see sellers giving up gains that they've also achieved. They know how much their house is worth because they probably bought it within the last couple of years. And you're going to be hard pressed to see them budging. They're going to have to budge a little bit. So you're not necessarily going to see a crash as much as you're just going to see a cool down and a slowdown. But that's just my 2 cents on it. I couldn't tell you what's going to happen 5 minutes, much less 5 months from now, with any accuracy more than anybody else. And if I could, I'd be winning the lottery or doing a lot better in the stock market than helping people with real estate.
That part.
Excellent. Well,
That's some great candor, great honesty. I love that. I love that.
Excellent.
Um,
So obviously you have a lot of
so
sage advice, and it sounds like you help a lot of people. How can people get a hold of you if they wanted to reach out to you and if
They
they
can
want to
reach me pretty
start the
much
whole process?
24/7. I work around the clock. So if anybody wants to reach out, they can, find us on our website at lspmortgage.com. That stands for Lone Star Premier Mortgage. Or they can reach me directly on my phone at 832-947-3041. Text, call, email, anytime. My email is john@lspmortgage.com.
Excellent.
awesome, awesome.
So, sounds like you're
Well,
pretty easily accessible, so that's great. Awesome. Well, we
so we
appreciate
really
you for being
appreciate
on
you
the
coming on,
show.
Yeah.
Yes.
What
sharing
else?
this very valuable information.
Yeah, the only other thing
Um,
that I can think of, and I
and
don't know how we are on time, if you guys want me to talk about it, is what your loan
we're
officer
good.
won't tell you about your closing costs.
Yeah, absolutely. Let's talk about that.
Okay,
Ooh, yeah,
so
yeah.
we discussed that the minimum down payment on a conventional loan is anywhere between 3 to 5%, depending if you're a first time home buyer or if you're in a certain income bracket. On an FHA loan, it's 3.5%. On a VA loan, there is no down payment, and on a USDA loan, potentially there's no down payment as well. But one of the things your loan officer may not tell you or explain to you is going to be that there's additional costs beyond your down payment. Again, 99% of which the bank does not control. These are all third party company fees, other people that are going to be involved in the process to help you purchase real estate. So some of those fees include like your title company. The title company is going to do all the legwork to ensure that when you buy this house, any loans or liens attached to the home get made known to you at or before closing and get resolved at or before closing. And that, when you buy the house, they're going to ensure that it's just, between you and your bank and there's not anybody else that's owed any money off of it. The other thing the title company is going to do is they're going to ensure that whoever's selling you the house has the legal right and authority to do so. That there's not going to be some third cousin that comes out of the woodworks 10 years down the road saying, hey, that was my great grandpa's house and he left it to my family in his will too. The people that sold it to you never had the right to do so without our signature and permission as well. And then you find out you've been living and paying in a house for 10 years you don't legally own, right? So
Wow.
to back their work up, they're going to give you title insurance, which is required. It's an insurance policy that protects you in case of any claims against your deed or title. Beyond that, you'll have a few other smaller fees, like the county's going to charge you a fee to update the county property records and tax rolls with you being the new official owner in the property records. If there's an HOA, they may charge you a fee to update their records as well. Beyond that, your other largest costs are going to be your insurance, tax, escrows, and reserves, right? Insurance and taxes, they're only billed and due once a year. Because they're only billed and due once a year, you're going to pay for insurance for the first year up front. But the part of the monthly payment that we talked about earlier that is for the taxes and the insurance, every month you make that payment, they're going to slice that piece off and they're going to save it aside into a little side account. They call it the escrow account. So that all year round, as you're making your payment, they're taking it off, setting it aside, taking it off, setting it aside all year so that next year when the bill comes due, you've already been setting it aside and saving it. They're going to automatically pay it out of that account for you on your behalf. Now, because your taxes and insurance can go up or down year over year, they are required by law to keep at least 3 months worth of a reserve in there or a cushion, just in case for some reason, if the insurance or taxes go up mid-year and you're short, they can pull from the reserves. They'll adjust that part of your payment to make sure the reserves are caught up and that you have enough for next year's bill, in that account. But all that to say, closing costs are going to be somewhere between 3 to 5% on average. 4% in a good middle of the road ballpark. If you're looking at a down payment somewhere between 3 to 5%, if you're looking at FHA at 3.5%, 3.5 is pretty close to 4. If you just double your down payment and add a little bit, that'll give you a good idea of what you can expect for down payment, closing, and everything all together. So what your loan officer may not tell you in this regard is that they may be underestimating some of these numbers to, again, make their offering look better, to say, hey, your closing costs with us are going to be a lot cheaper. They don't control
Yeah.
those numbers. They're all third-party company fees. The only thing the bank controls is how much they're going to charge you to give you the loan and whether or not, you're going to be charged points on the rate that they're quoting you. And that's another conversation completely as well. So let's just say on a $200,000 house, 3.5% is $7,000 down. Double that, add a little bit. You're probably looking at somewhere about 15 to 16,000. And I tend to overestimate my numbers because I like to plan for the worst and hope for the best. I want to be able to call people at the end and tell them, hey, the number went down, not up.
Yeah.
That's excellent.
Whew,
Now you
great.
just open a whole can of worms. Like, let's talk about
I know,
rates
right?
and points and
Okay.
how does that work?
All right. So Here's another thing your loan officer may not explain to you, right? You have to ask, whether the rate they're quoting you includes buying down points or anything like that. So rates move in eighths of a point, both up and down. It can go off rate a little bit, but generally speaking, that's how it works. So, for instance, 4%, 4.125, 4.25, 4.375, and so forth and so forth. They also go down 3.75, 3.87, sorry, 3.875, 3.75, 3.625, 3.5, and so forth and so forth. Your par rate is what we would call, let's just say it's that 4% is your par rate. The par rate is the rate that doesn't cost you anything, but you're not getting anything back to get that rate either, right? So you might come to me and you could say, hey, John, my grandparents are willing to give us some extra money. It's about $2,000. We were thinking about putting it towards our down payment. What do you think? How much will it save us? Most people are dismayed to find out that it's not going to save you as much as you think. Every $1,000 you put down may only move your monthly payment by about $7 or $8 a month, right? So conversely, I might say, well, instead of putting it towards the down payment, why don't we look at buying the rate down? Instead of taking 4%, you can take 3.75. It may cost you an extra $2,000 at closing to get that, but that $2,000 potentially could save you somewhere in the range of $20,000 to $30,000 of interest over time when we factor that out. If you're going to stay there the full 30 years, that may be another thing your loan officer doesn't tell you or explain, right? You got to look at how much is it going to cost you? How long is it going to take? How much will it save you every month? And from that savings, how long will it take to recoup the initial $2,000 you're putting in? That's your breakover point. That's where you're going to want to stay until at least to start getting your money back, right? Excuse me. And so conversely, you could come to me and you could say, hey, John, we were a little short on our closing costs. We had to get new tires on the vehicle. Something happened. We're going to be short by about $2,000. Well, then I might say, okay, well, instead of 4%, let's look at 4.25. Because you're taking the higher rate, the bank will give you a $2,000 credit back towards your closing costs. And it's only going to move your monthly payment by about, $20. You might say, hey, $20, I can fade that. Well, we really need the extra cash. Okay. So what you have to watch out for is that most banks are going to be pretty close to each other with regards to pricing. Sometimes when you work with a broker, you're going to get a lot better pricing. But if you've got everybody kind of giving you the same numbers and one person, let's say everybody's telling you 5%, 5%, 5.125, 4.99, but you got that one guy that's saying, hey, we can get you 4.5. That should send up a little red flag to say, well, is that going to cost me anything? And that's a big question you'd ask everyone. Is that going to cost me anything for that rate? So I tell everybody the rate I quote you is at no cost to you. If you want to buy it down or get a credit, we can have that conversation as well. And we explain to everybody with regards to that's just how rates work. So when you go to the builder and they offer to pay all these closing costs for you, you're generally going to pay a 0.5% higher interest than when you could without them, because all they're doing is making you take the higher rate on the sheet that you would have already gotten a credit for anywhere else. And they're going to say, oh, you see that credit right there? That's us paying for these things we told you we'd pay for. Or they're making it into the sale price. So those are some things that your loan officer may not tell you with regards to rates.
I've never heard that. This is good stuff.
Wow.
I don't want to end.
We're going to have to bring you back.
What's that?
She
We're
said
going to have to bring you back on.
Yeah, I would love to come back on. I mean, but, we started this conversation at the very beginning about, it may not be that they're not telling you, that they're just not explaining these things well enough. And it surprises me how many people I talk to and they say, nobody explained any of this to me. And this is standard what we do for every single client. My guys, and probably my wife more than anybody, are so tired of this conversation because I repeat it the same almost every single time. My wife could probably quote it. And everything I've told you guys is the exact same components I give to every single person every step of the way. I have a ebook that I wrote, and I pretty much wrote out that conversation the exact same way. So, it's just once you know how it all works, there's no Wizard of Oz behind the curtain pulling the levers. It's just decisions to be made at that point, and you have the right information to make good decisions.
Well, hey, John, you don't have to explain any of that ever again because you have this show, and now you can just send them the show, be like,
Absolutely.
listen to this. So that'll save a ton of time for you. So cool.
Right.
Well, is there any last things to wrap up?
No, I've said, a lot already. I'd love to come back. Do you guys have any more questions for me?
We're good. We appreciate you for
no,
taking
we
time out
don't.
of your schedule.
We look to have you come back. I want to apologize for our third co-host, my dog Donnie, decided she wanted to come on the show with us tonight. So excuse me, guys.
Oh, no worries.
You're good. So yeah, just hang out in the lobby while we wrap up the show, and
Sounds
we'll
good.
talk to you after the show's over.
All right. Thanks
All
again.
right. All right. Thank you. Whew. I definitely feel more lit. I don't know about
Good.
you, but I feel more literate.
I do too.
So this is
I do
great
too.
stuff,
Donnie,
and
oh,
I wish I would have known as I was going through my house buying process back in 2019. But what do you do? That's
yes.
why we have the show, right?
Right. And that's the thing. We can always play it back, get this insight again and again and again.
Absolutely. And I'm super glad for John too, so he doesn't have to keep repeating himself to everybody who talks to you. You'd be like, just go watch the show and then come talk to me. That'll save him
Exactly.
a ton of time. So cool. Well, we
Good,
appreciate you
right?
guys for tuning in. And if you got any value out of the show, go ahead and smash that like button. If you're on YouTube, go ahead and subscribe to our YouTube show, FinLit Live. Our goal is to get to 1,000 subscribers by the end of the year. And it's already August. I can't believe it. We're halfway through August. And so, but there's
I
a
know.
lot of other great events that are coming up that I want to highlight. So, right off the bat, we have a men's conference coming up. It's going to be on August 27th. It's going to start at 8 a.m. and go through 3:30. I'm going to be one of the speakers at the conference. Super excited about this. Andrew Landry, he's been phenomenal in putting this together. He actually has a nonprofit, Where Men Hurts, and they meet weekly and they talk about issues that men deal with. And it's nice. They used to be in a barbershop. I know they meet at his restaurant that he just opened up. So definitely check out Where Men Hurt if you're interested in being in a community with other guys that are going through similar issues that you are. And then on September 8th, yours truly, Dr. Michelle DeSalle and I will be teaching teens about literacy because I think that's where it starts. Like our school is failing our kids at teaching them how money works, and that's one of the purposes behind the show is to educate people because we weren't taught. And if the government uh, keeps us illiterate about how money works, guess what? They have control of it. So that's why we want to gain that control back and start young, start at our teen level, start at our young adult level. So on
Mhm.
September 8th at the High Meadow Branch Library, that's in Aldine, we will be hosting the Money Smart for Teens. It's going to be
Yes.
from 3 to 4 p.m. Super excited about that. And then, in addition to that, going with the teen theme, one of the local judges, Lucia Bates, she's over precinct 3, precinct 2, or precinct 3, one of those. She's hosting her own Teen Youth Summit on September 10th, that Saturday. It's going to be at Goose Creek Memorial High School. It's a free event, so definitely bring your kids. They're going to have door prizes to teach the kids how to dress for success. It's going to be a great event. And in addition to that, we have a lot going on. I'm going to be a Rotary speaker. Don't pay any mind to that, but I'm actually organizing on the staff of organizing a men's conference and Alliance for Men. This one's free. It's going to be on September 17th from 10 a.m. to 2 p.m. It's going to be a citywide initiative. We have a ton of great vendors. If we're dealing with any sort of issues that men deal with, from financial to relational to mental to judicial. So if you know anybody that's struggling in any area of their life, send them our way. And the purpose of this conference is not just to have a one and done type deal, but we have resources that can follow them after the conference is over because
Right.
it's an ongoing continuous process. And so that's the purpose of this one. It's going to be held at Greenhouse International in the north side of Houston. This is a new announcement. We're going to have, my birthday is September 5th. It's literally on Labor Day this year. My mom was in labor on Labor Day. Can you believe that? So everybody celebrates her labor. So I'm actually partnering with Margaret Cruz for a birthday. Her birthday is also September. That's why we're partnering together. And if you are in the Houston area, this is open to anybody. It's going to be at Pitch 25. I've never been there, but I've seen the pictures and it looks like it's going to be a blast. It holds a lot of people. If you want to be a vendor at this event, we are definitely looking for vendors. I think we're going to have at least 10 vendors, so space is going to be limited. I just pushed this flyer out once. And we already had like 40 people register. So and people are registering for this really quickly. It's a free event for you to show up. So let's go celebrate my birthday. My birthday is really just an excuse to have everybody there. So let's just have some fun and network together. And last but not least, my personal Boost Your Sales Skill workshop is coming up on October 1st. Finlit Live is sponsoring this and super excited about this one. So if you're any type of executive, any type of sales professional, any type of leader, like we could always get better. Like I'm been in sales over 20 years now and I'm still learning. So any way we can encourage people to go to that next level in their sales and communication skills, I'm all for that. And so I want to share my wisdom that I've gleaned throughout the years with you. And if you want to join me, definitely go to my website, darnoldjr.com, and click on upcoming events, and you'll find all the details on any of these events. You can even click on the actual flyer, and it'll take you straight to the Eventbrite, so you can register for all those events that have Eventbrites. So, a lot going on. So, yeah. Well, how can they get a hold of you, Doctor?
Well, you can find me on Instagram at Michelle DeSalle, the Well Tattletale. You can also follow me on my new YouTube channel, the Tattletale.
Whoop.
Yes, I've did a little soft launch and everything, so you can, get tips and everything. And if you want to get a consultation with me, you can go to centricwealth.com. Thank you.
Excellent. And you can find me on almost every social media. It's all Darnold Jr. Obviously, you can find me on my website, darnoldjr.com. And we appreciate you guys for tuning in. And
Absolutely.
hopefully you tune in for next week because we have more exciting content for you. Like we literally have speakers booked all the way through September. So it's going to be a fun ride. Let's go. We appreciate you guys for getting lit.